Today's podcast is brought to you by Jerry Robinson's PACE Portfolio. Learn how to shield your investments from economic uncertainty with this complete do-it-yourself portfolio package. Learn more at paceportfolio.com. That's PACE portfolio.com.
Friends, welcome to the Monday edition of Follow the Money Daily, a daily podcast dedicated to your personal, spiritual, and financial liberty, found right here every single weekday on ftmdaily.com. That stands for Follow the Money Daily. I'm your host, Jerry Robinson, author of the book Bankruptcy of Our Nation and the publisher here at ftmdaily.com. And as always, I'm joined by my lovely wife, co-host, and the national director of our Christian Financial Advisor Network, Jennifer Robinson. Jennifer, how are you doing this morning?
I'm doing great. In fact, I'm doing really good because we just released our quarterly newsletter just this weekend. And I know that all of our FTM insiders and Trigger Trade Pro subscribers are probably happy to see that in their email inboxes. The main story, the headline story, was an article that you wrote entitled "The Coming Mideast Stock Market Boom."
Yeah, that was actually a pretty interesting story that we put together about how the Middle East is really blossoming right now. Even though you have all of this violence going across the Middle East, Iraq, Libya, of course, is going crazy in northern Africa, as well as the terrible violence that's occurring now in Gaza, Israel, and the protests in the West Bank. I mean, you have all of that to look at, but believe it or not, there are still some very interesting opportunities popping up across the Middle East, and that story really covers much of that. You did a story also on the position sizing. We talked about that with our Trigger Trade Pro subscribers for people who are traders, how you can have the very best system to identify and pick stocks, but if you don't position size properly, then you may not end up making any money at all, or you may lose money. Explain real quickly what the position sizing article is about.
That's right, Jerry. Basically, you can have a system that gives you a majority of winning trades or nearly all winning trades, and you can still end up losing money, in fact. And that's because of poor management of your money, poor position sizing. Maybe you choose to go all in on a stock that ends up losing 10%, and then you barely put any money into stocks that do really well. So position sizing techniques are very important, and that's what that article is all about.
That was really good too. I was glad to see that because you don't really see too much about that in a lot of the educational materials about trading. You don't see that particular aspect talked about a lot. So I was glad to see that article.
Yeah, so FTM Insiders, of course, you can log into your account and download the PDF right there. And if you receive a print copy of our newsletter, then you can expect that in your mailbox just a little bit later this week. And if you would like to get your hands on a copy of this newsletter, then you can certainly subscribe. Just go to ftmdaily.com, click the subscribe button, and you can either pay by the month or pay by the year. And I believe we have a coupon code out there somewhere for FTM Insider this month. So just Google FTM Insider coupon code, and you should find one there in your search results.
All right. Thanks, Jennifer. Well, there was a lot of news over the weekend, and we're not going to try to tackle all of it, obviously. We're just going to focus on a couple of things this morning. And mainly, there was a story that came out over the weekend from the New York Times that was very devastating to this Obama economic quote-unquote recovery that we've been hearing about so much for so many years. Now, a new study that provided even more evidence that Americans are getting poorer. According to the study, the total inflation-adjusted net worth for the typical American household back in 2003 was $87,992. 10 years later, it's only $56,335. That's a sharp 36% decline. So the median household net worth for Americans is shrinking. Household net worth is, of course, there's many components that make up that figure. But overall, the wealth of U.S. households is declining. Now, that's not a surprise to many people out there because they are suffering from that. But during the same period, from 2003 to 2013, this study found that the net worth for the wealthiest 5% of U.S. households increased by 14%. And if you look at the increase in the household net worth of the richest 1% in America, of course, you find that the increase was substantially higher than even that. But this number here, this figure of the average American net worth is declining down by 36% over the last 10 years. Now, there's a lot of reasons why we have seen the decrease in overall net worth across the country. We can point to many different things. What many experts now are pointing to is the lack of housing demand by the new generation, by the millennial generation, the youngest Americans. A new survey, by the way, conducted by Bankrate.com reveals perhaps at least partially why U.S. household net worth has dropped so much over the last decade. According to the survey, nearly 40% of American adults aged 18 to 29, that's that millennial generation, favors cash investments, such as a savings account or a CD, as their preferred way to invest money that they don't plan on needing for the next 10 years. So instead of putting their money into real estate, and instead of putting their money into stocks or even gold and silver, up to 40% of the millennial generation are simply putting their money in the bank. And this is somewhat understandable. When you think about the younger generation of Americans, they have seen their parents, no doubt, suffer through the dot-com bubble, through the 2008 financial crisis. They saw their stocks and the value of their stocks has dropped dramatically. And then also many of these younger Americans have seen their friends, their family suffer from the housing bubble. Many people who could not sell their homes, they were not able to get out from underneath their mortgage. Maybe they were upside down on a house, whatever the case might be. But the point is today, the millennial generation is not buying houses the way that previous generations did. And there's a lot of concern over the fact that these young people are not going out and buying homes. Latest figures show that only 37% of millennials now own their home compared to 42% just 5 years ago. And no doubt one of the reasons why they're not out buying homes and doing that is because they have some of the highest rate of student debt ever seen. The average student debt for those who attended a public university currently now stands at about $24,000. If you attended a private university or you have a graduate degree, no doubt the average is much higher. The average law school graduate now owes more than $100,000 in student debt. And so when you're that heavy in debt and you're still trying to find a decent job, or you're still building your credit, or maybe your credit is not very good, whatever the case might be, you're just going to rent. And this has been the big hubbub amongst financial planners, investment analysts, and of course the entire real estate industry and those who own homes. I mean, you have a lot of baby boomers that over the last several decades, last couple of decades in particular, have gone out and taken their money. Many baby boomers are making more money than they ever have in their entire life, even though we're seeing incomes pretty stagnant right now. Wage growth is stagnant. But overall, the baby boom generation really enjoyed a rapid rise in their incomes over the years. And at the point when they were making the most amount of money, they began to move out to the suburbs. They began to buy homes, many of which that they could barely afford. You remember the rise of the McMansions. And of course, they wanted them detailed and customized to fit their every taste and whim and personal preference. And now there is a concern about who's going to buy these houses whenever the baby boomers are no longer, wanting to live in them. Now, if you're a young American in that millennial generation and you go to an expensive college and you have that degree and you get out and you have tons of student loan debt, where are you going to move? I mean, you're going to move to the country where prices are cheaper, or are you going to move to the city, into the urban areas? The ambitious kids are moving straight to the cities. They're going there and being attracted there by better career opportunities, more nightlife, more fun, more things to do. In fact, today, just unbelievable number. I've had to read this 2 or 3 times and confirm it several times, but 81% of Americans live in urban areas. Now, only 19% live outside of what you would call an urban area. And so because of that, you have all of these people clustered into these urban areas, into these cities, and all of them want the same thing. They all want to either, buy a home, a nice home, or they want to rent that nice, cool apartment, the one that you can walk to anything from, that nice urban lifestyle that people have been sold on. So that's what they want. And you have all of these people in these cities wanting the same thing. So more demand for rentals in particular, it drives up the price. I mean, what happens when you have more demand for something? Well, the price goes up. So when you think about the millennial generation and where they are, What do they need to buy a home? Well, they need a solid income, which means they need to have a good job or some sort of, job that's throwing off money to them in a very consistent manner. They need a reasonable debt to income ratio, so not too much debt, reasonable amount, and usually some sort of down payment, which means they need to have cash available to them. And if you don't have those things, then you really have no business buying a home, period. You have many more other things that are more important to worry about, like paying off your debt or finding a good job or, developing a solid income. And as I mentioned before, it's not just the millennial generation that's continuing to drive the rental demand. Don't forget about the baby boom generation that I mentioned earlier. There are nearly 10,000 baby boomers retiring every single day. And this trend is expected to continue for the next decade and a half. And as I mentioned, many of these people bought more house than they needed or than they could afford, especially in retirement. So they're going to want to sell their homes. And when they do, they're hoping that there are enough people there coming up behind them to buy their home. But it's rather difficult to imagine the millennial generation being there to pick up the slack from the baby boom generation as they begin to try to sell their homes, downsize. Many of these empty nesters want somebody to buy their nest. And unfortunately, we are no longer in a position of rising incomes and rising household net worths. The wealth of this nation is becoming more and more concentrated in the hands of just a few. And we're continuing to see that trend as we go forward. And besides, as I mentioned, the millennial generation is not chomping at the bit to move into the suburbs where the baby boomers bought their homes. They are wanting to be closer to the cities. We're seeing that trend go on now where there is a lot of building of multifamilies inside the cities, inside, near the inner cities even, as more people need to be closer to their jobs or whatever the case might be, making life a bit more convenient. So moving out to the suburbs and buying that McMansion that the baby boomers had, bought and fixed up and customized to their own taste and preferences just doesn't look that great to the millennial. Number one, he can't afford it. And number two, he probably wouldn't buy it if he could because it's not where he wants to be. I just know from studying this and paying attention to it, what I've seen a lot of is concern about the demographics as well. It's not just that this younger generation is broke, not just that they are not able to afford some of these bigger homes, and not just that they don't want to move to the suburbs. In fact, some of the studies that I've seen point to the demographics and say that we are slowly becoming a country that is going to have a majority of minorities. And what you will see in much of the literature is the concern that many of the minorities here in America have not been educated to earn the type of incomes that were earned by the baby boom generation. And therefore, they're not going to be able to afford to buy these homes as they come on the market. Some projections show about 1.5 to 2 million homes coming onto the market every year for the next decade and a half, 2 decades. And some of these homes are, affordable, but many of them are not. Many of them were houses that were bought by the wealthiest generation our nation has ever seen, the baby boom generation. And now that we're slowly coming back to earth here in this economy, and we're only going to continue to go there once the Fed finally pops the bubble, there's a lot of concern as to whether these baby boomers are going to be able to get out of their homes. And so that explains a lot why the mainstream financial press has been pushing millennials to go out and buy a home. And I got to be honest with you, I don't know why a young American would want to go out and buy a home, especially in this current economy. I just don't get it, especially when you consider the job mobility today, how people are very mobile and many people are going to have more than one job, unlike in the past. According to some studies, people have an average of anywhere between 7 and 15 jobs during their lifetime, and they're not always in the same city. So renting, in many ways, is one of the smartest things I think that the younger generation can do. If you go to Germany, for example, you'll find that there is little taboo at all about being a lifelong renter. But in America, we have this hang up on home ownership. It's part of the American dream. Everybody should own a home. In fact, the government has encouraged it before. In fact, it's what led to the housing bubble in the first place, where the low rates coupled with very poor government policy that was misguided, promoting the idea that everyone should be able to buy a home. And that is just fundamentally incorrect. I disagree. I don't think that some people have any business buying a home. It's not just a home loan that you have to pay. You have to pay for property taxes. You got to pay for homeowners insurance. You got to pay for flood insurance and maybe even earthquake insurance if you live in certain parts of the country. You have to pay for plumbing problems, and you have to pay for yard work if you don't have time to do it yourself. And there's general maintenance that's required. So the list goes on and on. So I don't understand why this huge push for millennials to go out and buy homes, except for the fact that there are many homes that need to be sold and there's just not enough demand for them.
And Jerry, not only does it not make much sense that everyone, especially the younger generation, should go out and buy a home, but the fact that this idea is being hyped up so much in a lot of the media outlets tells you that the financial education of all generations, really, but even the younger generation, has not really improved. So you have the millennials seeing what happened to the baby boomers during the 2000 and 2008 stock market crashes, and then, of course, the real estate bubble in 2008. But the fact that the millennials are keeping their money in cash in a savings account and missing out on the biggest stock market rally in history tells you that the financial education is the same or potentially even worse than it was during the last crashes.
It's sad because these younger Americans, this millennial generation, as I mentioned, they saw the crash in 2000. They saw the crash in 2008. They saw their friends, get stuck upside down in homes. They saw the market just collapse. They pull all their cash, put it into the bank, and say, forget the stock market and forget real estate. And in almost the ultimate twist of irony, as you point out, they miss the most unbelievable bull market that the United States has ever seen. I mean, there's just no doubt about it. This is unbelievable what we're seeing in the stock market. The rapid rise that we've seen of stock values over the last several years by the Fed as they pump up this stock market. But since 2009, we have been encouraging people to consider buying rental homes. And during that time, we have seen rental prices just continue to increase all across the board. And it's because the demand for these rental properties are continuing to rise. It makes all the sense in the world based upon where we are. This is really a wonderful time for Americans who have been wise with their money because, again, we have a tremendous amount of people who cannot afford to buy a house. They don't have the credit, or they don't have a solid enough income. They have way too much debt, and they're okay to rent. And so I don't get the problem. I mean, if you're a real estate investor, this is heaven, right? You've got a whole bunch of people who can't afford to buy, but they can afford to rent. So what do? If you've got money, if you're well positioned, if you've been smart, if you've been wise with your money, well, goodness, go out and buy a rental property, right? And I'll tell you, the properties that are really going to be hit hard are these McMansions. It's these $400,000, $500,000, $600,000 homes that future generations are just not going to be able to buy, or even if they could, they're not in places where the shift is moving. We have so many people now moving, as I said, to the middle of the city, not out to the suburbs, not out to the extremes. So housing affordability is a major keyword right now. And if you have affordable housing to offer, your phone's ringing off the hook. I remember the old days when I used to have to put my rental properties on, the newspaper. I'd have to call the newspaper and pay an outrageous fee, to be able to put my ad in there. Now, you just put it on Craigslist for free in most markets, and your phone just rings off the hook. There's renters everywhere. Everybody wants to rent because they can't afford to buy. And again, I just don't see this as a major problem. I mean, you could point to the fact that economically it's not healthy, but come on. I mean, just point at anything in this economy and tell me that it's healthy. This is a completely sick economy, and it's not going to be solved by millennials going out and buying homes they can't afford. That's not going to solve our problem. So I'm extremely bullish on cheap rental properties, little duplexes that you can buy, 2 units. You get them fairly cheap somewhere in town, but not in the most expensive parts of town. If you have affordable housing, I really believe that over the course of the next decade or two, you're going to be in a very good place. Think about the baby boomers who are going to have to sell their properties. If they can't sell them, they're going to have to reverse mortgage them. If they are able to manage to sell them, do you think they're going to be moving into another very expensive property? Many of them are going to be renting. So I just see sky's the limit for renters. I mean, America is turning into a renter nation. Home ownership in America is falling to historic lows, and the trend just continues. And that's how it has been in the past. There was always the landed gentry in the old times and the serfs, the people who couldn't afford to buy land and the people who did own land. And if you didn't own land, you had to work on somebody's land for the right to live there. So again, the only people who are going to be really hurt by this are the people who bought way too much house back in the day and then cannot sell it because the demographic shifts that we're having here in America, the economic crisis that we're having here in our country, it's just not viable. So if you have a house like that, that's a problem. And the longer you hold on to it, I'm just not convinced that you're going to be okay because, again, you take a look at the overall projection of these 10,000 baby boomers who are retiring every day, 8 to 10,000 every single day. And what are they thinking? They're thinking the same thing. I need to sell this house. I have too much house. I used to have 3 or 4 kids and now they're all gone. I'm an empty nester. I need to sell this house, liquidate it, move somewhere different. So you're only going to get more competition as the days go by. Well, anyway, this Wednesday, we're going to be hosting an exclusive webinar for all of our subscribers. And in it, we're going to be talking about many different things. But one of the things I'm going to be talking about is this topic and the specifics of how we are cashing in on the shifting real estate investment landscape here in America. We'll share with you some of our favorite real estate investment ideas. We'll even talk about how you can gain exposure to real estate without even having to purchase an investment property, generating a monthly income from real estate. This is a very strong trend in real estate. This renter nation that America is becoming, it's a serious matter. And again, if you have cash on the sidelines, if you have been wise with your money, buying a cheap piece of rental real estate can be a very smart idea in the right situation. Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Attention stock traders, FTM Daily is proud to announce our latest resources for stock traders of all experience levels. Are you ready to wade in the stock trading waters? Well, unlock Jerry Robinson's trading room and receive his daily stock trading idea, complete with buy price, stop loss price, exit target, and daily trading alerts. Become an FTM insider and unlock the trading room instantly. But perhaps one stock idea per day is not enough for you. No problem. Get everything in Option 1 Plus. Analyze any U.S. stock or ETF for short-term and long-term buy and sell signals with our new Trigger Trade Pro system. Find FTM Insider and Trigger Trade Pro in our online store today. Visit ftmdaily.com/store or give us a call at 800-609-5530. That's ftmdaily.com/store. or call us at 800-609-5530.
Ladies and gentlemen,
Here we go.
Contact us anytime through our website at ftmdaily.com. And now more Follow the Money with Jerry Robinson.
I love it.
Well, Jerry, the S&P 500 here on this Monday was flat, basically staying at 1978 as that was the level it closed out on Friday. Gold is at 1305, up slightly for the day, and silver up also very slightly to $20.66.
Yeah, it's quite remarkable that the market is still holding up so well, considering all the violence that we see around the world. Of course, what we have going on in Gaza, that ceasefire has broken down again. No truce over there. Ukraine's still a quagmire. Libya's an out-of-control mess. Iraq's still in flames with ISIS. And there's many other things that are impacting international sentiment towards the markets. And so it's really surprising to see the markets continuing to levitate at this area just right below the 2,000 level. By the way, the Federal Reserve will be making its next policy decision, announcing it on Wednesday after the conclusion of a two-day meeting. Investors are also going to find out how the second quarter growth here in the United States has done after that dismal contraction that we had in the first quarter. So we'll be watching that. A lot of news, a lot of corporate earnings coming out. Some good, some bad, but overall the market's still holding up, so we're going to continue to watch it. Gold and silver rebounding slightly on all of the negativity going on around the world right now. Well, all right, friends, that brings us to the end of our program. Thank you so much for choosing to allow us into your life each and every day. And as always, I leave you with this final word. This time again, just a thought. For a moment, give yourself permission to dream. What great thing would you attempt if you knew you could not fail? What if it were impossible to fail? How would that change your life, and how would that change what you're focused on? What would you do? Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. We'll see you right back here again tomorrow. Until then, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before